Great, thank you. Thanks for having me. Too long didn't read of that intro is I run an insurance company that only insures governmental entities. Sewer districts, water districts, towns, villages, cities. We insure over 3,000 across the United States. So when things go really badly, we're the ones paying for it, which is why we're there, and that's the point of it. But it's been great to hear some of the earlier speakers talk about some of the risk management we can do, because the more we can lower exposure, the lower rates will be, and the lower the losses will hopefully be. I just want to first start off by talking a little bit about our mission. Our team really takes what we do seriously, in that we don't insure McDonald's. When a McDonald's doesn't work, that's fine. Like, you might miss your fries, but if a city doesn't work, that's a big deal. And like, we're the ones on the ground doing the real work of sort of our country. And so I just wanted to take a moment to thank you for all your dedication. It's really important to us. And personally, it's important as my father just retired 2 months ago after 30 years in the state of New Hampshire. He regulated over 2,500 water systems. So didn't get paid a lot, but he loved what he did, and you can see the impact he has. So again, thank you. It's really important what you all do, and it keeps this country going. So on the screen here, you're going to be looking at the loss ratios and total premium written for cyber insurance coverage. Why does that matter? It's the municipality class for cyber is probably one of the worst performing and one of the hardest classes for insurance companies to write right now. So on the left, that's the premium written. So you can see that it almost doubled from 16 to 20. And the reason for that is twofold. The first is a lot more companies, municipalities, et cetera, are now choosing to get cyber coverage. But secondly, it's becoming a lot more expensive to insure because losses are also going up. So that's the reason you're seeing that on the left. And then on the right, that's showing what the loss ratios are this past year. And so when you see a loss ratio that high, that's generally bad news, because insurance companies, when they lose money, do one of two things. They charge you more, or they leave the space. So that's why it impacts all the people in the room when you see those loss ratios up there. So that's starting to get into some concerning territory. And then here is specifically the US cyber loss ratios. 2020 is on the right, on that left side. That's not good news. That means that about 70% loss ratio, if you add in the expenses that insurance companies have, they're losing money. So that means that they're going to have to start either not insuring or charging a lot more for the cyber coverage that they provide. And generally, like the last quarter, what we're seeing is minimum 25% rate increases for cyber coverage, and that's globally. So that's even for good risks. So again, it's becoming a lot harder to insure, and it's becoming a lot more expensive to insure. And specifically, public entity, as I mentioned, is one of the hardest classes right now. And so it's in the top 3 biggest threats. On the left, that's the average and the median average ransomware payments globally. Those lines aren't in the right direction from an insurance perspective. That's frightening, because it's driven by 2 things. The first is there are more attacks that are more successful. And then secondly, and the most important thing, demands are becoming much higher than they used to. It's great to see that little dip, but as we can see, things are going back up again. And then on the right-hand side of the slide, that just shows the breakdown within the public entity space. Education is a big one, but then followed secondly by townships and cities. Those are sort of the 2 biggest classes where, at least from the numbers we have, are where the attacks are occurring. And just for some context, TMHEC, my company, we're the 3rd largest writer of cyber in the United States. So we see a lot, we're a big company, and so these are sort of aggregated across that. So sort of start at the top. What is a ransomware attack? And so it's generally someone, usually in North Korea, Russia, or some otherwhere where the state doesn't actually care what they do, or they want them to actually attack others. And it usually comes from a human error. That's where most of these attacks come from. And so someone is reading their email and they see an email from what they think is either their boss or a colleague that says, click on this attachment, please open it. They do, and then that is when the ransomware is infected into the system. Usually, it's not an immediate demand for ransom. They like to do is they like to have that ransomware inside your entity, and then they sit there and wait. Because usually that person isn't the one they're most interested in. They're interested in your backups. They're interested in your data and your other weakest points. And so they'll usually wait months and sometimes years for their code to maliciously spread until they get a full sense of how vulnerable you are. And then that's when they will actually commence their attack. And then you'll get a ransom note oftentimes, and it's for an exorbitant amount. And then it is up to you to pay it or not, unless you have cyber insurance coverage, in which most of those folks will actually work with you to figure out how to go forward. And there's always a deadline. They're not just going to sit in there and wait. And the tragic aspect of this is most of the time they'll release whatever they were holding ransom, whether it's data back to you or systems, they'll have them up and running. But there's obviously no guarantee that they're going to take away their malicious code. So, hey, thanks, you just unlocked it, but you can do it anytime again. And oftentimes it's not up to what it was beforehand. In addition to, the FBI highly recommends you don't pay the ransom. So there's a lot of things involved in that, and it's a very difficult decision where oftentimes it's also put up to, for instance, a city council vote. And there are a couple high profile cases, we can talk about it a little bit, where they did choose to pay it and some where they did not. So this is just a quick overview of sort of some of the higher profile attacks of 2019. On the left, the average downtime is about 9.6 days from a ransomware attack. This is across all entities, companies, municipalities, but that's a long time. And so that might mean that you can't collect taxes. It means you don't have a 911 system. And for 10 days, that can be a big impact on your community. Just a couple up here, Baltimore, I'll point out, is they demanded about maybe $100,000 in Bitcoin at the time to restart their systems, and the city said, nope, we're good. We're gonna do it ourselves. $18 million later, they were back up and running. And for months, they couldn't collect property taxes. And again, from a principal perspective, I do understand the decision. But at the same time, from a downstream effect, that's pretty impactful. Now, some of that was putting in systems that are far more robust than they already had. So you could argue that a lot of that money should have been spent already as a prophylactic rather than a reactive. And I think the mayor talked about that, right? Band-Aid. It's much better to do it ahead of time. It will be cheaper and you will feel a lot better and your citizens will be happier. But this also shows that it's a nationwide problem, and it also affects small entities and big entities. If you go back 5 to 10 years, most hackers were interested in the larger entities because that's where they saw big dollar signs. But fast forward today, they actually prefer smaller and mid-size because those entities typically have insurance coverage where sometimes the limit is $3 million, $10 million, and their systems are usually far weaker due to budgetary constraints. They just don't have the money that some of these larger entities to spend. Here are just 2 examples from our own cyber group of issues. I can't read that, so I'll have to read it from here. But so an account, and we see this very frequently on the smaller accounts, at a small municipality, had an email from one of their vendors. In this case, this is the finance committee, but hey, you send a wire transfer over here, and so it's $50,000. After sending the transfer, the accountant then realized that the committee wasn't the one requesting it, it was a third party who was a hacker. And it was from a phishing email. And so the bank said, it's a wire transfer. You told us to send it. That's all fine and good, so we can't give you back the money. So they did have insurance coverage from Team HEC, and so the municipality was reimbursed for the financial loss. But again, that was 100% preventable. You know, and the main thing is through training for your employees, which is if you get an email that says, hey, please send this money, pick up the phone. Very easy. Did you request this? If it is, great, but most of the time, you're gonna send money, sending an email like that isn't how you typically get it. And then another example is a laptop from an IT director at a school district. And that had lots of PII or personal identifiable information on a lot of the students and staff. And it was stolen, so it was a violation of the policies. So it's good that the school district had a policy that you shouldn't take that out. But they never found it, and suddenly there's a class action lawsuit from everybody in the town saying, thanks for losing my data. Now I don't know what's going to happen to me. So in this case, cyber coverage will still kick in because it will have like public relations reimbursements. They'll have a response team. And so there are ways that you can at least cover that loss. But again, if they had prevented the loss of that laptop, they'd be in a much better position. This just shows some of the top 10 most common cyber attacks on the left. They have fun names. They are not fun. And so just something you might want to familiarize yourself with. And then on the right is a survey done by a university asking the municipalities, how often do they see attacks? And it's pretty scary that that percentage answered hourly or more frequently. So this is not something that you go to bed and nothing happens. This is 24/7. It is always happening. They are always probing to find weaknesses and vulnerabilities in your systems and your people. So what can you do about it on the preventive side right now from risk management? These are sort of the main things as you think about protecting your entity from a cyber perspective. So the first is multi-factor authentication. What that is you probably used to sign in a Gmail or an Amazon account, but when you type in your username and password, it'll push either a code to your phone or it'll send a text with a series of numbers. Therefore, that's called multi-factor. So you have your username and password, and you have that other piece. So that's the multi-aspect component of that. Second is endpoint detection and response. That's what EDR stands for, and antivirus. And we'll get a little bit into that. The third is a firewall. Fourth are backups, critically important. Can we restore our systems easily and quickly? And then the last piece is software patch management. Are my machines up to date? Are my devices up to date? Are all my servers and all my software? Because those aren't, then you're not having them, the hackers much more easily get into your system. And then across all of that, are you training your staff and telling them what could be happening? And then secondly, are you actually engaging in an outside party to do a simulation for a phishing attack? So the first one, MFA, spoke about this. This is a requirement at this point if you want to get cyber insurance coverage. If there are some small insurers out there who may write this, I would only take that if you can't take anything else, because they're probably going to lose a lot of money. This is a requirement. Everyone requires MFA at this point. And some of the statistics related to it up there is 80% of hacking related breaches are due to bad passwords or stolen passwords. So you need to be making sure that your folks regenerate new passwords, usually once a quarter or at least every 6 months. And again, training that says it's not password 1 or password 123 or the name of your entity in 123 exclamation point. They really should be more complicated. The thinking in the industry used to be, this was 10 years ago, random letters and numbers combined, and now it's shifted to actually phrases that your employees know, but they're completely separate, right? So it could be a house they grew up in, the name of their dog, plus the year they got married, but it's 4 or 5 different things combined, so it's easy to remember, but it's also so random to someone that wouldn't know that. And so on the left there is 55% of all the companies in America now and municipalities have MFA. And so this is just increasing pretty quickly each year. And just a few key points is MFA is not just username and password. Someone was like, oh, but that's two different things. No, that's the same. Multi is that's one unit and then you need something else. Secondly, insurers are interested in what vendors you use for this. So if it's some podunk, doesn't really do anything, that will be either probably result in a higher rate or no quote. Certificate-based MFA is no longer good enough. 2 years ago, I wouldn't have said this. That's the case today. So something to keep in mind. And then when we talk about MFA, all users have to use MFA for remote access, including email. So even if you just want to check your email on your laptop at home, you still need MFA. That's really important. And then secondly, and this is often overlooked, privileged admin users. These are usually desktop support or your IT director. These are people who can make changes to the access permissions for all employees. Anytime they log on, they need MFA. So even when you're on your local network, which should theoretically be protected, where you don't need to use MFA, those users always need to use it, because if one of those users is hacked, that's probably the biggest chink in the armor, because then they can change the permissions for everybody, and that is pretty frightening. And then lastly, on the right is just the percentage of what type of MFA. So back when I started investment banking years ago, we had a token. So it sat on my keychain and it just read a different number of letters or digits, and then that was what you would type in to get in. But as you can see on the right, most now are software based. That's we'll send you a text, or on your phone you have an app and it sends you randomized digits. The token is mostly going away. You'll probably see more biometrics, right? Iris, keypads, but it's more expensive from a hardware perspective to install that. But again, software is where we see most of the market. So this is just so important that if you don't have this, if you're getting a quote now, great, take it, I guess. But this is 101 for cyber protection. So EDR and antivirus. Antivirus is the basis of that. Like that's sort of, if you don't have that, I mean, but the problem with antivirus is it's all known threats. So it's basically a dictionary of all the hacks, all the ransomware, all the bugs that exist out there. The problem is hackers are innovative people. They don't just use what they already have. So an antivirus package will stop viruses that are already known, which is good, but that's really the basics. And so now most insurers are looking for folks to have EDR. And you can see the progression here. I won't go through all of it, but it's basically, think of it as more of almost a sentient system. And so they use AI and machine learning to look for anomalies across your network by user and by device. And so it's always searching, making sure everything seems to be okay. And then when it finds issues, it immediately quarantines them, alerts your IT staff. That's far more robust. And then the last piece on the bottom is we have a list of preferred vendors. Other insurers might disagree, but at least for us, these are if you don't have one of these vendors, we basically don't think you actually have EDR. Most people have Windows Defender because it's Microsoft. We all have Microsoft machines for the most part. So it's fairly prevalent, but again, those are our preferred vendors. Thirdly, firewall. You have to have it. So this is pretty basic. Hopefully most of you do, but it basically is a wall that helps bring in the people who can and stop those who shouldn't. And there's software firewalls and there are also hardware firewalls. For a small entity, it could be a couple $1,000. For a huge company, it could be 50 to 100 grand. So again, it ranges, but on the smaller side, this is one of the more affordable preventative components. Backups, super critical, also very expensive. And what matters mainly on a backup is how frequently it's backed up. And then secondly, how long it takes to get that backup and then implemented so you're back to running up. And the main reason is, as you think about it from an insurance perspective, every minute, hour, day that you're not back up to where you were costs the insurance company money and it costs you money. And so if it takes you 10 days from your backup Insurance company's going to look at that and it's going to price you differently, and they say in 6 hours we can get back up. That's a huge delta. So this is so critical, because if you're hacked and it's ransomware, hey, we're going to shut down your systems, and you backed up 3 hours ago, you're like, cool, I'm not going to pay you. Like, my system 3 hours ago was totally fine. So we're going to be all set here. So a really critical component. Software patch management, probably the least sexy of all of these. It's basically all those reminders: download this, install this, reboot your machine, reboot your machine, reboot your machine. That's what this is. And so it's important to have a system in place where you're checking your devices and then rolling out updates and then confirming those are in place. Because you can have the most advanced EDR antivirus backup system, but if you're running ancient machines, that's so easy to hack, so easy. Tragically, most machines aren't up to date, as you can see on the left of that. So this is a huge vulnerability for our infrastructure. And then across all of these, I mentioned training and simulations. 95% of successful cyber attacks are caused by human error. It's us. We are the issue. Humans are fallible. And so cybersecurity trainings, and for example, we have a free platform where you can assign trainings to your staff and you can see if they've completed it. So your cyber insurers should have that, or they're probably not very good. And then another component of this I mentioned is phishing simulations. So it's a third-party company that actually sends fake emails throughout. And so I remember receiving an email from my boss, and she was like, "Oh yeah, can you send me a wire for $250,000?" I mean, it's hilarious because, like, no, but you know, some people see that are like, "Oh, I'm nervous, I got to send that," and the email comes from with what her email would look like, but there's one letter off, right? Or the URL is slightly different. Because some of the hackers are so sophisticated, they can do a really good job of that. So that is really important. The good news, I know this is the first bit of good news I've delivered today, is as governmental entities, you are eligible for some of this for free. Private companies don't have that privilege. So our government's the federal government's 10 years behind on this. Should have done this 10 years ago, but through DHS, Department of Homeland Security, there's a number of things that you can actually sign up for and have done for free. So they actually will do a vulnerability scan. That's something you absolutely should do. They can do a phishing campaign assessment. And they'll look at your architecture and they'll grade you on this. So this is really important. On the bottom left, I actually have the URLs. So you can actually go to it online, but sorry, question, yeah?
We did one, I think, with NSA.
Yep.
And obviously, it was great. It's not the finance, but it was really instructive.
Excellent. So he didn't hear, but he mentioned that they had done one with the NSA and it was really great and very instructive. So that's great feedback. And I'm glad, and it's free because the federal government realizes that their weakest points are the local side because of the budgetary constraints. And then the Center for Internet Security is the other things. And this is, again, for governmental entities. It's a subscription that you get for free that others would pay for. And it's unlike DHS where they can actually go and evaluate you. This is more of what's going on. They have an operations center if you have questions. So again, highly recommend this because these two entities are both dedicated to the critical infrastructure of our country. And so it's rare that I can actually say there's something free out there that you should take advantage of. In this case, this is one of those. So highly, highly recommend it. Oh, sorry. Please, I'd love, yeah.
So part of the reason that CISA stepping up is because this is not some kid sitting in a basement somewhere hacking, just practicing around playing board games like the map we brought up so many years ago. It's a business model. They have a full-on board of directors. They've got chief operations. They do it's a business model, and they offer ransomware as a service now.
Yes, yeah, that's correct. Yeah, so you can actually buy ransomware services out there because you don't like someone. I mean, you can actually go on the dark web and be like, I want you to get rid of this person. And again, it's sponsored mainly by Russia, North Korea, Iran. Like, there is real funding going towards these folks and real state support, which is incredibly deep pockets, even in China too. So it is, you're exactly correct. It's a business model. You can make a lot of money doing this and retire very quickly. I'm just gonna go this quickly, just because you can read this later if you're really interested in the size, but there's two kind of main components of cyber coverage. We recommend you get both, but again, your call, this is third party, right? So this is if someone takes some data and they sue you, right? So this is when this will kick in and the coverage will actually help you. And then people usually ask, well, you have bodily injury liability, right? Well, what if they shut down a traffic light and two people get in an accident? They can actually go after you for that, right? That's a cybersecurity issue. So a couple pages here, and then first party, right? So they breach you. Well, no, maybe no one else has been affected, but you are. So that's where the coverage would kick in for you directly. And these are just a number of the sort of various called sublines, right? So there's the extortion, breaking loss. Breaking is just when they've shut down all of your devices, so it turns into a brick. So you can use it in a wall, but you can't use it as a computer anymore. Reward expenses, so oftentimes put out a reward, say if you catch this person, blah, 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 so that the coverage will kick in for that. So that's my cyber portion. Any questions on that? I know not a lot like good news, but it's one of those that is prevented. There's always luck involved, but if you put in the right prescriptive measures, you become much safer. And people want to quote you, and it'll be a lot cheaper than if you don't have that. Question, yeah.
So we have a software that we use for multi-factor, and they are hacked. Does insurance pay, or does the software insurance pay?
So that is a great question, because what you're talking about there, if I can make an illusion, right, is it's sort of if we were to think about it in the property markets, you have a catastrophe like a hurricane, or you just have a small fire in a home, right? In one case, you have to think about it from an insurance perspective. In a hurricane, every single insurance company and reinsurer is involved. That is a huge event, but it's at least narrowed to, say, like Louisiana and Mississippi. There's no hurricane that affects the globe all at once. Cyber insurance is the only peril out there that affects the whole globe all at once. So reinsurers and insurers are still wrapping their arms around, holy smokes, what if a fire is across the whole world at the same time? So usually in that instance, then it depends on your specific coverage, but the first notice is to your own carrier, right? And then if they choose to go after the software provider, they will then subrogate over to that provider. Another example would be like if one of your vehicles is driving down the road and another car hits it and the other one's at fault, you'd first give notice of loss to your carrier, but then that carrier would go after Progressive or whomever else was the driver of that first. And then when that limit is extinguished, if you have enough limit on your own, then your own carrier would go kick in for that, if that makes sense. But good question. Cool, okay, well then we're now gonna switch to how technology is actually helping us be safer, and something that's a good aspect about technology. Here we are back to insurance numbers. So we're looking at the auto liability marketplace, and this is for your own vehicles when they're out driving, and if they make a mistake or someone hits them, oftentimes. So this is the combined ratio, which is loss plus expenses. If it's above 100%, it means losing money. So this is the last 10 years for the auto liability industry. Not good news. The insurers are losing money writing auto from a commercial basis, and that includes municipalities. And a couple things are driving this. Social inflation, chief among them. Verdicts are just higher. Settlements are higher. Younger juries are resulting in an increase in this. And the medical costs of bodily injury claims for auto accidents is massively increasing. And so that's reflecting in some of those loss ratios and combined ratios. And then litigation financing. This is basically private equity for litigants, has sort of erupted in the last 10 years. What that means is there are pools of investors who go around to all the plaintiffs, the entire plaintiff's bar, and they basically use data and they look through all of the potential lawsuits they can sell, that they can actually file, and then we'll give money to the plaintiff's attorney and say, file this lawsuit and we will bankroll you for a portion of the proceeds. And again, so that's I don't think good for America, but again, it occurs and there's money to be made. And so it's just a different asset class to some degree, just like people who go buy homes they think will be worth more. They think that this lawsuit will be better for them. So that's driving a lot of this. This is really insurance-y, but what that's showing there on the top and bottom, those lines are slightly increasing towards the end. And that's called IBNR, incurred but not reported, AKA we think there are claims out there, we just haven't heard about them yet. Since these in municipalities, it's occurrence-based policies, right? So if something happens, if you write a policy in 2014 and something happens in 2021 that dealt with the time period of 2014, the 2014 carrier pays for it. So what this means is that policies written 7 or 8 years ago are way more expensive than they thought they would be. And this is just to show you sort of the regionality, but you don't want to be in the red, and Utah is in the red. So it is worse than the sort of average state-by-state risk. And then this is just where Utah sits relative to the other states. So still on the right-hand side of the graph. Better than the overall US by a little bit, only because Nevada, Louisiana, and Georgia are so bad, but the loss ratio here in the state is not great. This kind of just sums up what we just talked about, but worst losses ever in 2019. And you're seeing there sort of bodily injury, second bullet, it doubled from 14 to 18 in terms of verdicts. That's really bad news. And then as you think about each of the liability claims, 40% of what we pay goes to attorneys. And I think John mentioned it earlier. Guess who really wins in most liability cases? The attorneys. And they take a lot of it. So that's driving a lot of this. And a driving accident is, what did I there? It says it's almost twice the cost of a workplace injury. And we do have pretty good risk management on workplace injuries, but they're not as expensive as driving ones. So what can we do about that? Well, there's actually some really cool technology out there with AI, cameras, and then OBD devices, which are on board, plug into the mainframe of the car. And using big data and real-time alerting, you can actually make a pretty big impact on the safety of your drivers and the safety of your citizens. Because one key piece of this is, as we view our own coverage, is we're trying to ensure like the safety of our communities. And so if our drivers can be safer and like we can protect one lives of our citizens because they didn't get hit, that's a pretty big win. You can't really put a cost on that, but you can feel really good about it. So on here, it's a little hard to read. There's a lot of things that like some of these AI providers can do. And so a couple of them are sort of like, they look at speed, G-force, they use driver alerting, live tracking, they follow distance between you and the car in front of you, traffic lights, stop lights, drowsiness, distractedness, seat belts. And one of the things that some of them are doing out now is they're focusing less on, hey, you did this wrong. And it's actually an overall driver score and says, you know what, you did all of these things right. So really great work. Here are a couple things you can work on. That's a lot different discussion than you stink and here are the things you did wrong. It's rewarding good behavior in addition to mitigating bad behavior from a driving perspective. So this is just sort of a quick diagram of what the camera on the bottom right can look like. And so it sits right on the rear view mirror. then it faces forward, and then it faces the driver as well. And then there's some that also have to the side, and you can also put rear facing, but the main one is forward and driver. And so the AI is constantly working and analyzing an AI, artificial intelligence. Sorry, just to clarify that. And so it's reading the visuals on the screen and interpreting them all the time. And so why are we excited about this as an insurer? The first is it encourages good driving behavior and provides fleet managers and department heads with the ability to actually look at the scores for their individual drivers, and then where it breaks down of where they can be better or where they're excellent. And so you can put in some incentives into the program if you so choose. So you can actually reward people with a bonus or something if they do well. At the same time, they're also, for us, we love it because it captures collisions. And most of the time, 3/4 of the time across all of our entities, it's someone else's fault. It's not us. But the problem is if you don't have any cameras, that's hard to prove. And so these cameras have been really helpful in capturing the actual claim. And then secondly, where we've seen it really helpful is accident occurs, even if it's our fault, the camera sees the other person getting out of the vehicle, walking around totally fine. And then suddenly 3 weeks later, they're like, no, I went to the hospital, my back's broken. And this has been really helpful in getting them to the settlement table faster and for a lot lower money. And even if our entity is at fault, we will pursue that claim in a very different manner than if we didn't know that. So we won't waste $100,000 on experts, crashing and actors, and then lawyers to figure out, whoops, this was our fault. So we'll save $100 grand on that claim right there, which is good for everybody. And just some sort of examples, and some of the, there are 3 main providers out there that we think are really good. This is just one outcome for one of the companies, but a reduction of 80% in distracted driving, reduction of 80% in collision frequency, up to 80% loss reduction, and then the last case is 2 times faster claim processing. That means it's cheaper to process the claim and you get your money that much faster. So these are really big improvements that we think are really powerful. And there's gonna be a video that, if you wouldn't mind pulling up, Taylor, and just shows you what one looks like today. And again, I'm not here to shill for any vendor. It's just there are sort of 2 camera providers and 1 onboard device that we'll talk about at the end that are pretty interesting. Because it's both the driver sometimes and pedestrians and other drivers in and around the area. Secondly, it does prevent that fraud component. You saw that, I mean, we see the same thing in some of our entities, is that there's the city's logo, they have deep pockets, let's see what happens. Thirdly, where we think this has really interesting implications is for policies and procedures related to the city and governmental immunities, which we'll hear about a little bit later today. But an example is, and we see this frequently and more often now, which is not good. So on the law enforcement side, if there's an emergency, officers should, and this is almost everybody has this policy, your lights and your sirens need to be on. They're going to something like that, they have to be on. And but if you're going through an intersection with a stop line or a stoplight, you still need to slow down and you need to look both ways. That doesn't always happen. So what could be a $250,000 claim, I'm using an example from the last 6 months, has turned into a $3 million claim for us because that officer did not have their lights on and they didn't slow down. And they T-boned someone who happened to be 80, right? And again, with already tons of pre-existing conditions, but if that officer had followed the policies and procedures and they knew that there was a way to track that, then that would have been a $250,000 claim. Very different, but and all it would have taken is flicking a switch and stopping a little bit. So again, we think this is really interesting. We're following it closely to see if there are ways that we can help us either subsidize the cost or build it into insurance coverages, because we think, like, again, we view insurance as a partnership, that we all want to minimize risk. And the last one here, because I'm 2 minutes away from my time, is it's called Geotab, and it's an OBD device. So instead of a camera, it sits in the vehicle. The state of Utah implemented it back, I think, in 2014. So the Department of Administrative Services. And that's why it's great to have a Utah case example. And they put it, I think, 1,600 of their 4,700 vehicles. And you can Google this, it's online, and really interesting results. So out of their 4,700 cars, I think specifically the Department of Corrections, they found that they didn't need 60 vehicles. Because of what it does is it tracks how long it's being used, speed, G-forces, lights, sirens, all of that, and then it aggregates all that data into sort of a fleet management dashboard where you can take a look at all of this. And they started with corrections, and then due to the success, Human Services, the State Library, Admin Services, and the Tax Commission all also started putting in their vehicles. And so it can ensure policy compliance. They also didn't have a seatbelt policy prior to using this for the corrections, because they thought, oh, maybe you need to get out of the vehicle really quickly. And they found that actually they started to implement one. And that only if you're driving at 5 miles an hour or less, or there's some other reason that you should not have a seatbelt on. They changed their pursuit policy. So they actually lowered the thresholds of when you should actually engage someone. It's been really helpful for driving complaints, because it actually tracks where the car is, how fast it was driving. And so if someone in the community says, well, this is the issue, well, now we have this, and you'd say, you're wrong. And they can monitor the firearm locker within all of their correction vehicles. And so that's helpful for both, hey, like you got to be following policy, or again, if someone ever broke into a vehicle, you'd see that. So really interesting technology that I think we think can be really helpful. One question I often get is, how do you sell this to your team? Because it's sort of like Big Brother is watching. Yes, to some extent that is the case, but a lot of this is actually designed for the driver, because most complaints by, again, the citizens of our municipalities are frivolous. Someone's angry and they're trying to find a way to get back at someone. Most of the time, drivers are doing the right thing. So this provides a defensible in-court record of what occurred. And then secondly, as you saw from the video, most of this is designed for the driver's safety. There's no gotcha moments in this. It's, again, you're looking at your phone, so you could actually be hitting someone. So just stop the car, take a look at the phone, and go. So we think it's pretty powerful. The 3 vendors we think are interesting are Notto, Netrodyne. They're doing all of Amazon's fleet. And then Geotab are sort of the 3. So technology can be detrimental to what we do in the sense of some of the cybercrime, but in this case, we see that there are really interesting applications for the future. So that's it. Any questions on this or even the cyber? We've sort of covered it all. Great. Well, thanks a lot for your time. Really appreciate it.